Tonight we begin with a story that will impact millions of Americans. For decades, Toyota and Honda have been pillars of the U.S. auto market, building not just cars but communities across the country. Now both companies are signaling a major pullback from the United States, a move that's sending shockwaves through the industry. This isn't just a business decision, it's a turning point with global consequences. The auto industry is at the center of economic and technological change, and what happens here often predicts broader trends. Why are these titans scaling back now? What does it mean for American jobs and for the cars you'll see on the road? These questions matter to families, workers, and anyone who depends on the auto industry. Toyota and Honda's story in America has always been one of growth, rising from underdogs to industry leaders by delivering reliable, fuel-efficient cars. Their apparent change of course is startling, challenging a narrative that's lasted nearly half a century. To understand this shift, we need to look beyond numbers, to the forces reshaping our world. Media, electric vehicle charging stations at dealership, shipping containers with global trade symbols, handshake between international business partners, electric vehicles, global trade, and shifting alliances. Tonight we'll break down the history, the facts, and the future. We'll hear from experts and consider the human impact on workers and consumers alike. This is more than a headline. It's a fundamental realignment of an industry that has defined modern life. Decisions made in Tokyo boardrooms today will be felt in American driveways for years to come. Let's begin by understanding how we got here. The story of Toyota and Honda in America is about to enter a new chapter, and it starts now. To grasp today's news, we need to look back. In the 1970s, the U.S. auto market was dominated by the Big Three, until the oil crisis changed everything. Americans needed smaller, more fuel-efficient cars, and Toyota and Honda were ready. Their compact, reliable models like the Corolla and Civic quickly won over drivers. By the 1980s, their reputation for quality was unmatched, creating a loyal customer base. To truly succeed, they became American, building factories in Ohio and Kentucky, employing thousands. This strategy blunted criticism and made them part of the U.S. economic fabric. By the 1990s and 2000s, models like the Camry and Accord topped sales charts, and their U.S. footprint expanded. Their philosophy of continuous improvement, Kaizen, set a new global standard for manufacturing. They weren't just building cars, they were building trust and a legacy. For decades, their strategy was relentless expansion in the U.S. Now, for the first time, we're seeing a deliberate retreat. The companies that once symbolized growth are now pulling back. This shift marks the end of an era. The question is, why now? The signs of this shift have been building for months. It's not a sudden exit, but a calculated reduction. Toyota is cutting shifts at its Kentucky plant by 15% starting next year. Honda is consolidating production and discontinuing less popular models. Official statements are diplomatic, but the message is clear. Priorities are changing. Investment in new U.S. projects has slowed dramatically, with capital now flowing to Asia and emerging markets. Dealer allocations for popular models are being tightened, frustrating both dealers and customers. The era of aggressive U.S. expansion is over. Instead, we're seeing controlled scarcity and a redirection of resources. The numbers don't lie. Japanese automaker investment in the U.S. is down 30% from its peak. This is not just a pause, it's a strategic retreat. The question is, what's driving it? The electric vehicle revolution is at the heart of this shift. Toyota and Honda pioneered hybrids but underestimated how quickly the world would move to fully electric cars. Tesla changed the game, building not just cars but an entire EV ecosystem. Meanwhile, Chinese companies like BYD and NIO are producing affordable, innovative EVs at scale. Toyota and Honda now find themselves squeezed, playing catch-up in a race they once led. Developing competitive EVs requires massive investment, and the U.S. market, with its high costs and complex regulations, is less attractive for these new bets. Both companies are consolidating EV development in Asia, where supply chains and costs are more favorable. By pulling back in the U.S., they risk losing ground to Tesla and new American EV players, but spreading resources too thin could mean falling behind everywhere. Economics are a powerful force behind this retreat. Labor costs in the U.S. have risen, especially after recent union victories and new contracts. While good for workers, these costs make it harder for Toyota and Honda to compete with lower-cost factories overseas. The pandemic exposed the fragility of global supply chains, pushing companies to build closer to their suppliers, many of whom are in Asia. Geopolitical risks, trade tensions, and unpredictable U.S. policies add to the uncertainty. Concentrating production in stable, friendly regions is now seen as a way to de-risk the business. Ultimately, it's about return on investment. Building a factory in Asia is cheaper and more secure than in the U.S. The emotional ties to the American market are being overridden by the logic of the bottom line. The business case for U.S. expansion is fading. Toyota and Honda are following the numbers, and the numbers point overseas. Government policy is also shaping these decisions. The Inflation Reduction Act offers tax credits for EVs built in North America, but strict sourcing rules have made it tough for Toyota and Honda to qualify. Their supply chains are rooted in Asia, and reconfiguring them is slow and costly. Many of their models don't qualify for full credits, making them less competitive. Policy uncertainty, shifting regulations, tariffs, and political swings makes long-term planning risky. Companies need predictability for billion-dollar investments, but U.S. policy whiplash discourages commitment. Well-intentioned rules may be pushing key partners away. The balance between promoting domestic industry and welcoming global partners is delicate. Sometimes the rules meant to help can have the opposite effect. Behind the headlines, the human cost is real. Towns like Georgetown, Kentucky, and Marysville, Ohio have built their identities around these auto plants. A 15% cut in shifts can mean thousands of lost jobs, with ripple effects throughout the local economy. We spoke to workers in Alabama. Many have spent decades at these plants and now face an uncertain future. The fear isn't just about paychecks. It's about losing a way of life. Skills honed over years building gasoline cars may not transfer to the new world of EVs. Retraining programs exist, but many worry they'll be left behind. The promise of stable middle-class jobs is fading. Communities that once symbolized global partnership now face anxiety and doubt. The transition to EVs is leaving some workers behind. The impact is personal and it's profound. The future for these towns is uncertain, and the stakes couldn't be higher. This shift will hit consumers directly. Expect fewer choices and tighter inventory at dealerships. Prices for popular models may rise, and getting the exact car you want could become harder. American and South Korean brands are moving in to fill the gap, while Chinese automakers eye the U.S. market. Toyota and Honda may become more niche, focusing on profitable models or imports. Parts and service costs could rise if more vehicles are imported. The familiar landscape of the auto market is changing. Car buyers will need to be more informed and flexible than ever. The simple choice between a Camry and an Accord is no longer guaranteed. This is more than a story about two companies. It's the end of an era and the start of something new. The old order, where American, German, and Japanese giants ruled, is fracturing. The electric revolution and global competition are redrawing the map. Toyota and Honda's retreat from the U.S. is a signal of this new reality. For America, it's a moment of reckoning. Can we lead in the electric age? For Toyota and Honda, it's a high-stakes gamble, sacrificing U.S. market share for long-term survival. Whether this is a brilliant pivot or a miscalculation remains to be seen. As consumers and citizens, our choices and policies will shape what comes next. The automotive world we've known is changing forever. The road ahead will be bumpy, but it leads to a new destination. Stay informed, stay engaged. The story is still being written.